Investors across Wall Street are preparing for a potentially dramatic move in Palantir Technologies stock as the company gets ready to release its Q4 earnings results after the market closes on Monday. Expectations are elevated, not just because of Palantir's history of volatility around earnings, but also because options market activity suggests investors are bracing for another sharp reaction once the numbers are released. This anticipation reflects how closely watched Palantir has become within the broader artificial intelligence and software landscape. Based on current options pricing, the market is signaling that Palantir stock could move at least 9% by the end of next week. On the bullish side of that range, such a move would place the stock near $158, using Friday's closing price of roughly $147 as the starting point. On the bearish side, the shares could drop toward $133. A decline to that level would push the stock into negative territory for the year and mark a notable shift in sentiment, especially considering that Palantir has not finished a trading session in the $130 range since July. This setup is unfolding against a challenging backdrop for software stocks more broadly. The year has started on a rough note for many software names, particularly those tied to artificial intelligence. Investor focus has shifted away from application and platform providers and toward hardware manufacturers and semiconductor companies that supply the physical backbone of artificial intelligence systems. As a result, Palantir has fallen nearly 30% from the record highs it reached ahead of its previous earnings report in early November. Even with that pullback, expectations for the upcoming earnings release remain ambitious. Wall Street analysts are forecasting that Palantir will deliver record Q4 revenue of $1,340 million. In addition, adjusted earnings per share are expected to come in at 23 cents. If achieved, both figures would represent growth of more than 60% year over year, according to estimates compiled by Visible Alpha. Those growth rates underscore why Palantir continues to attract intense attention from investors despite concerns about valuation. Looking back at recent history provides additional context. In its prior earnings release in November, Palantir exceeded analyst expectations. However, instead of rallying, the stock declined in the days that followed. Investors grew concerned that the massive rally leading into 2025 had already priced in too much optimism. During 2025, Palantir shares surged roughly 135%, one of the strongest performances among large software companies. Yet, as the new year began, the stock moved lower as enthusiasm around artificial intelligence cooled, and investors reassessed how much they were willing to pay for growth. That uncertainty is reflected in analyst ratings. Among the 9 analysts currently tracked by Visible Alpha, opinions are split. 4 analysts rate the stock as a buy, while 5 recommend holding shares. This division highlights the ongoing debate surrounding Palantir's future. Bulls see a company that is redefining enterprise artificial intelligence, while skeptics worry that expectations have run too far ahead of fundamentals. Despite the mixed ratings, the average price target from these analysts sits near $189. That implies roughly 30% upside from recent trading levels and suggests that, on balance, analysts believe Palantir still has room to move higher. Importantly, this average target also points to the possibility of the stock eventually surpassing the record highs it set in November, assuming execution remains strong and market conditions improve. Beyond the near-term earnings reaction, Palantir occupies a unique position within the artificial intelligence investment narrative. The company has delivered triple-digit gains for shareholders for 3 consecutive years, an achievement that few large companies can match. At the same time, Palantir remains one of the most polarizing stocks on Wall Street. Supporters argue that its growth trajectory and technological leadership justify a premium valuation. Critics counter that Palantir may be among the most expensive software stocks ever, making it vulnerable to sharp declines if sentiment shifts. Reconciling these opposing views requires looking at both the bullish and bearish scenarios laid out by major institutions. Morgan Stanley, in particular, has outlined a wide range of possible outcomes that capture the uncertainty surrounding Palantir's future. In the most optimistic scenario, Palantir stock surges 130% to approximately $382 per share. This bullish outlook is grounded in Palantir's core business. The company develops advanced data analytics software for customers across both the public sector and private sector. Its primary platforms integrate vast amounts of data with machine learning models into a structured structured decision-making framework known as an ontology. This framework allows organizations to analyze complex information and make informed decisions at scale. In addition to its core offerings, Palantir has expanded into adjacent artificial intelligence capabilities. Its artificial intelligence platform enables customers to embed advanced language-based models directly into applications and business processes. This flexibility has made Palantir's software increasingly attractive to enterprises seeking to operationalize artificial intelligence rather than merely experiment with it. Independent research firms have taken notice. Over the past year, Forrester Research ranked Palantir as a leader in artificial intelligence decisioning platforms. The firm highlighted Palantir's current capabilities, long-term growth strategy, and strong customer feedback as key strengths. Similarly, International Data recognized Palantir as a leader in artificial intelligence, which is designed to optimize supply chain management and improve operational efficiency. Financial results have supported these accolades. In its most recent Q3 report, Palantir delivered standout performance. Revenue increased 63% to $1.1 billion, marking the 9th consecutive quarter of accelerating growth. Net income calculated under non-generally accepted accounting principles rose 110% to 21 cents per diluted share. Management also raised full-year guidance, now forecasting revenue growth of 53% for 2025. Morgan Stanley analysts Sanjit Singh and Keith Weiss have been particularly vocal about Palantir's strengths. They have stated that Palantir is delivering not only the strongest growth among public software companies, but also the highest level of profitability across the software industry. Based on this assessment, their bull case forecast places Palantir stock at $382 per share within a year. This target implies roughly 130% upside from a reference price of about $165. However, the bearish scenario paints a starkly different picture. In Morgan Stanley's downside case, Palantir stock falls 50% to roughly $81 per share. Such a move would represent a dramatic decline from the same $165 level. A variety of negative catalysts could contribute to this outcome, including disappointing financial performance, slower growth, or concerns surrounding management decisions. Ultimately, though, the bear case centers on valuation. Palantir currently trades at 102 times sales, making it the most expensive stock in the Standard & Poor's 500 by a wide margin. For comparison, AppLovin, the second most expensive company by this metric, trades at approximately 33 times sales. History suggests that sustaining valuations above 100 times sales is extraordinarily difficult for any software company. Looking at historical precedents reinforces this concern. Among the 100 largest United States software companies, only 7 have ever reached a price-to-sales multiple above 100, excluding Palantir itself. Every one of those companies eventually experienced a severe decline after hitting peak valuation levels. In the most favorable outcome, the stock fell 70%. In the worst cases, declines approached 90%. These examples illustrate the risks associated with extreme valuations, even for high-quality businesses. Taking both extremes into account leads to a more balanced outlook. A reasonable expectation is that Palantir trades around $200 to $250 per share by December 31st, 2026. This range effectively splits the difference between the most bullish and most bearish scenarios. It also reflects the likelihood that neither side of the debate will fully capitulate in the near future. In practical terms, some investors will continue to accumulate Palantir shares because its software has become a foundational tool within enterprise artificial intelligence. Others will remain cautious, focusing on valuation risks and historical precedents. This ongoing tension between growth optimism and valuation discipline is likely to shape Palantir's stock performance over the coming years. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.